Okay, SVG Joe. Now, okay. So what is your question exactly? Obviously, they have different trailing drawdowns and whatnot. Now, I will tell you this. Okay. Maybe are you asking the question, can you do a quick comparison between the 50K and 250K? Okay, both for Apex. Well, obviously the size of the contracts is different. You're going to be able to have a larger size. Both of those give you way more size potential than you should ever use in the market for those accounts. But um, the big thing for me and why I've gravitated towards 50K accounts versus 250K, and this is almost exclusively across the board. Sometimes they're the same price, sometimes they're a little cheaper, but it's the profit requirement to drawdown ratio. So for Apex, for a 50K account, it is a $3,000 profit to $2,500 drawdown. That's nearly a 1-to-1. I think it's like a 1.1 or 1.2. For the 250K account, it is a 15K profit to 6,500K drawdown. That is about a 2.2. So what that's telling you is that they're giving you a lot less rope. Most most prop firms structure it in this way because they know people will have um, their eyes set on bigger drawdowns overall, net dollar drawdowns and stuff like that, or bigger payouts. So what they do is they make it harder. Those bigger accounts are actually harder to get funded, and they're harder to get payouts. It just is. And so simply because that ratio is always working against you, and that drawdown, the intraday trailing drawdown is always working against you. Did that answer your question, or do you have more questions on that specific topic, Joe?
I mean, Joe, also something that I can add to it. I mean, every trader is different, so it really depends on your trading style.
Yeah.
Um, some people like the 250 because you have that extra buffer in terms of drawdown. So if you were to treat the 250K as a 50K, essentially you're not going to destroy that account or blow that account.
Is
Like
correct.
you're
Totally correct. If you treated the 250 like 50, yes, you have more leeway. But a lot of people will just increase position size, go from 2 ES to 4 ES or 5. So yes, you are absolutely right, Eula, for sure.
Yeah, so it really comes down to exactly what is your trading style, what's your risk management, because sometimes people do like the 50K. It's easier to pass. But at the same time, once they get the funded section, once they get their funded account, they just throw risk management out the window and they just blow that account right away, usually within the first 2 days. So if you
Mhm.
really look at it long term, not only are you paying for that evaluation, but you're also paying for that activation fee. Then you're just going to blow that right away. Where if you were to do the 250K account and you're steadily making that consistency and building that account up, even though it is a bigger profit target, but you're building better habits. So eventually, once you do get the activation to the fund account for the 250, then the likeliness of you surviving is a lot higher than the 50K. So that is another way to look at it.
Yes. And that's what most people don't do. They definitively will say it's a bigger account. I'm going to trade a bigger size. So, and I've fallen victim to that mindset, especially when I got started out to see how these prop firms were working, and how things flowed. Sizing too big, sizing down until I got comfortable. But then knowing the drawdown, yes, if you are doing 1 or 2 ES on the 250K, you're a-okay, you're good to go. Just know that it's clearly going to take you longer to go to a funded with that size. But if you're fine with that, then that's awesome. There's nothing wrong with that. So I've become more fond, honestly, I've become more fond of Top Step. Um, and that's simply because you've seen my training style. My training style, at least what I signal, is not scalping. And so it's letting trades breathe, if you will. And so it's still day trading, but it's catching large moves in the market. Um, after trading these prop firms for a while, anytime you do a constant trailing real-time drawdown, type of account, it's built for scalping, flat out. It is not built for, let your trade roll type of a deal. It's not. So Top Step is in the day. It's not intraday, it's in the day. And so that's what I'm liking about it, because that's my trading style. I'll leave a trade open like today for what, 3 hours, 4 hours? And we caught 110 points, 115 points, I think is what it maxed out at. So that would have never been possible on an Apex account, just so you know. I was trading Top Step. And it's because right in the middle of that trade was a 25 point pullback. So that would have decimated my trailing drawdown. So just so you guys know.
And the other thing is, like Kevin said, you do have to kind of adjust your trading style based on what type of account you have. So that's why whenever you're selecting, especially for prop firm accounts, it's very important to select exactly which prop firm account you want to fit your trading style. I mean, eventually, especially for the trailing drawdown accounts, once you get funded, once you hit the max drawdown, then once you have that really nice buffer, then you can treat it like an end-of-day account, because it won't penalize you at all once you have that buffer. But you have to get to that point. So
Well said.
you have to kind of try out and see exactly what fits best for you.
Yeah, and if you guys have really honed your scalping skills, it's not going to matter which account you try. I mean, scalping will work for any prop firm. Holding all day long or for a couple hours doesn't work for any prop firm. It can, like let's say you have a day where it's a trend day, and a lot of times that'll be signaled by the gamma exposure to expect a trend day. But let's say those trend days, when we were in the up market and it was like straight up, but the pullbacks were just like $5. I mean, we've seen a lot of those days where we'll catch 40 or 50 points and the pullbacks are very, very minimal on those type of days. It's just pretty much steady grinding all the way up. And those are the type of days that are amazing for Apex, because whenever you're in a position and the pullback is that nominal, then it doesn't kill you. But like super volatile days, I would bet today there are tons of people who are right on that trade, but like a 25 point pullback today, right in the middle of the trade, busted them out, even potentially blew their Apex accounts. So always consider that too. So I trade, Apex, I trade Top Step, I trade Take Profit as well. What was it? Take Profit Trader. And then I haven't yet traded my funded futures yet, but I heard they're really good. You can probably speak to that.
No, I actually don't have my funded futures account. It's
You
on my
don't?
but I do have like Blue Knox. That's something that you can recommend. I would recommend trying. They are
What is it called?
It's called Blue Knox. It's BULENOX. So they are really nice. They only offer Rhythmic though, but the only problem with them is they're really pricey if you get any accounts over 100K accounts. Once you get over 100K accounts, then the activation fees are all the ass. But if you have
Bulanox.
yeah, but if you do like 50K accounts to 100K accounts, then they're great because they're cheap. Then also the activation fees are relatively the same as the Apex normal activation fees for lifetime. So they kind of match. And plus, the payout period is a lot faster than Apex, and it's really nice where you just have 10 trading days and you request withdraw anytime before that Friday, and you'll get it by the following Wednesday.
Let's see here. Now, do they have coupon codes like a lot of these places too?
Oh yes, they have coupon codes out of the ass too. Let me see what's the latest one they have.
I mean, because there's so many prop firms, right? It's like, I'm even finding new ones all the time. And I'm like, and then when you find ones that aren't kind of renowned and well known, you're like, are they actually going to pay me?
I got paid out by them, so there's no issues there.
Awesome.
Actually,
Do they do end of day? What do they do? Let's see here.
So they do have end of day. And I think the end of days are typically a little bit pricier, but you
Okay.
can but you can pick the like trailing one and that works too. So it really depends. Sometimes they do have nice discounts for in the days. So it just really depends on the promotions that they have.
Cool.
I do have it in my
All
profile.
right. It is 9 o'clock. You want to go ahead and get started, Eula?
Yeah, let me go ahead and share my screen.
Okay, guys, we're gonna flip between screens here, just so you guys know. So between my screen and his, a lot of his will be the basis for the structure of this class. Some of my screen sharing will be to show you what I'm looking at on a daily basis. So okay. I see that screen. Does everybody see that screen? Thanks, Playboy, for about Bolonex. Awesome. Thank you.
Let me go ahead and give me 1 second.
Bolonox,
Yeah.
tomato.
Yeah, it's in my profile. If you look at it, then it's right there. Give me
Right.
1 second. Let me figure out this.
Is there
And
any other good ones that you guys know of, have experience with, payments, all those things that you guys would recommend? So Bolonox, I've heard of it and I've never used it, but I'm always open to, especially if the rules are favorable. It's like looking
oh,
for the best blackjack game in town.
I mean, you can do like I used to promote elite trader funding, but now they're like as bad as Apex. But we can talk about it later. Let's go ahead and get started since
Let's
it's
get
9 o'clock.
started.
All right,
All right,
so
guys, go ahead.
in our
Sorry.
fir- in our first session, we talked about. Give me 1 second. I need to kind of rearrange my windows a little bit because it kind of threw it away. But yeah, okay. So in our first session, we talked about the different types of future accounts. You have the cash accounts and platform accounts. So this session, we're going to talk about the trading plan and also how to create one and the different strategies that you can use to create that trading plan. Um, so here is the trading plan outline. So this is one thing that I usually follow to the T before I get into a trade. One, I check my emotional state. Whether if I am like happy, overconfident, if I'm kind of like I'm trading after a loss, or maybe I'm trying revenge trading, I check myself and see what type of state I'm in. Next, you will kind of want to make sure that there are any like economic news coming up, and that may affect your trade. So that's one thing that I'll also check and see exactly what time of the day it is before I enter one. Then market conditions, whether if it's choppy, if it's trend day, or maybe it's about to show some type of setup. That's market conditions. The technical analysis is basically whenever you use like EMAs or you use some type of indicators for a technical analysis to get in the trade, then that's also to confirm your trade setup. Then the next one is the risk to reward ratio. It's exactly what type of risk am I losing? Like how much money am I willing to lose and how much money am I trying to make? Um, then the next one is just to make sure I have that confirmation before I enter. Then I decide on the position size and exactly where do I stop and where do I take the profits. Is there anything you want to add, Kevin, before we move?
Yeah, for sure. I'm going to go over a few of these things too. You know, uh, Emotional state that can be, that can be talked about ad nauseum for hours. However, um, we're going to do things I do things a little differently. I just want to give you guys a disclaimer. I do things a little bit differently. And as I had said last time, if it works for you, whatever you're doing, just keep doing it. You don't have to do things my way. And this is me talking to you, Law, or Playboy, or anybody out there. But if there's anything that I mentioned that could help you take your game to another level, that's amazing. So just keep that in mind. You're going to hear a couple different perspectives on an actual trading plan, on an actual trade execution. So I just want you to know that. I always go into every single trade I do on a 50K account. Every trade has a $1,000 stop loss at the most. So just so you know that I do a flat dollar stop loss. And the reason I do that is because I know that that's going to give me bare minimum two trades, two trades to where I have to get them both completely wrong. Well, I typically have, 60, 70%. I'd have to really track it, 60, 70% win rate. So for me, that's putting things in my favor. If I was a 50-50 guy, it's kind of hit or miss, I get two in a row. But when you do a limit to your trades with a dollar amount, you're going to find that your P&L is much healthier. Doing straight risk reward doesn't always tell the story because, you talk about your position size, that could be different from time to time. I'm currently trading about a third of my normal position size right now due to the volatility in the market. So that's allowing my stop losses to be 3 times the size and still risks that same $1,000. So when I go and do, 7 MES like you guys have been watching tonight, or excuse me, today, and have a 30-point stop loss, wrap your head around the fact that that's only $1,000 loss to me. So I'm willing to let a trade, even if I'm a little bit early, work its way out. If we were in a, much tighter consolidating market, like, one of those days where it's a 20-point range, a 30-point stop loss doesn't make sense, versus, a 10-point stop loss. So I want you to keep that in mind as well. Let's see here. Stop loss, take profits. I'll go over that as well. So next slide, please.
Yeah, we're gonna have a slide for each of those outlines that we have.
Okay.
So emotional state, I think we covered that already. So there's really not much to cover unless you want to add on top of that, Kevin.
I do want to say this. You guys need to make darn sure that you are not trading exhausted. Trading exhausted, you don't have the clarity in your mind. You're burning the candle at both ends, etc. If you do not have that, then you are missing things, guaranteed. A lot of times, what's interesting is you'll probably be more apt to make a counter trend trade and get your ass kicked. So you have to pay attention to your not only emotional state, but being tired. It's okay, guys, if you had a long day at work and you need to take the next day off. It's okay if you take a 3-day weekend. Don't come to the trading table being willing to full port, especially if you're in cash options or cash futures, knowing that you're not 100%. That's one of the biggest mistakes of a lot of traders, especially trade a lot, is they show up no matter what day it is, and they may be on 2 hours of sleep. I don't know about you guys. Have you guys ever had a problem and gotten your butt kicked on 2 hours of sleep? I imagine so. So I want to encourage you, as nice as it is to hear our voices on here on a daily basis, if you are wiped out, get your head clear, get a good night of sleep. Okay. Next.
All right. I also want to add, don't trade when you're like drunk, high, or on pills or whatnot, because I've done that before. So that didn't turn out very well. So that's also something that you shouldn't
do. Yes, it removes your clarity. If anybody, don't trade with beer goggles, all right? Or weed goggles. Or whatever.
All right, the next part is the news and events, just economic news. I know a lot of people either probably use like certain websites like my Forex Factory or something like that. I personally use I think my Forex. Let me see what it is.
I mean, usually the best sites are the Forex related sites.
Yeah, it's at my forexbooks.com, and that's where I post all the screenshots and the economic calendars channel. And I know some people use the Forex Factory, so it really depends on where you get your news, but that is something that you do want to use religiously and just make sure you follow up on what upcoming news is going to happen during the day.
Yes, and guys who trade TradingView, I actually have a news indicator that I will show you when I share my screen that you can add to your TradingView. Guys, I use TradingView 99% of the time. So whatever I show you is going to be on TradingView. I'm a big believer in their charting. I'm a big believer in everything that they provide. It's as far as I'm concerned, my personal opinion is they're the best, and they have so many, indicators to add on. It's thousands and thousands of people create specialized stuff, So you're going to see a few of those on my screen a little bit later. What news is one of them? Oh, here you go. Market conditions. I mean, guys, we've been trading in $150 SPX range on a daily basis. ES has been like $200, 200 points on certain days. So obviously we're in a highly, highly volatile market. That typically happens when you have large pullbacks. That's nothing new to have a violent pullback. But market conditions dictate the size of your position. I'm trading either a quarter or 1/3 right now, and I am telling you every time I take that trade. So if you are thinking of going full port or your normal position, well, the blood's on your hands, because when this thing goes 15 points the other direction, which is perfectly within my stop loss, a fully sized trade is going to get absolutely crushed. You're going to get nervous about the stop loss. It's because you've over leveraged and oversized into the trade. So make sure, and you can use the ATR indicator. ATR is on like everything. If you're looking at ATR, I'll help show that to you as well. So I'll go over that a little bit when I show my screen. But make sure that if you're trading in a volatile market, size down. If you're trading in an extremely tight, range-bound consolidation market, well, maybe you can go a little bit up in size, or at least have full size. So, anything to add, Yula?
No, you covered it. Everything.
Cool.
All right, technical analysis. This is something that pretty much everyone uses, whether it's indicators. Actually, it's majority is indicators. This is like for me, I'm a VWAP trader, so I live and breathe VWAP. So you'll always hear me like I'm going to use VWAP as a indicator. But if it's above the VWAP, it's going to be bullish. Then that's where I go long. If it's below VWAP, then I'm going to be bearish. Then that's where I go short. Then you have your typical like trend indicators, your SMA, your exponential moving average, WMAs, MACD. Then I'm also a huge support and resistance trader, so I use VWAP. I mean, pivot points, VWAP, but also like FIB sometimes. Then there are also like momentum indicators where it's like RSI or Stochastic. Then volatility where it's like what Kevin said earlier, ATR, average true range and average true price. Then you also have Bollinger Bands. Then VIX. Then as for volume, there's also the volume indicators where you have the rate of change, then also volume profile. And there's also others where Kevin's gonna cover that. If you want, Kevin, you can go ahead and screen share so you can kind of show what type of indicators you use and what you use for technical analysis.
Okay. Let me know if you guys see my screen now? I need you guys to type in to please. Okay, you do see my screen. Okay, gotcha. Cool. So I'm just going to start talking here. All right, my screen is composed. This is the way I trade. Again, I'm not telling you what you're doing is right or wrong. I'm just showing you what my trading style is. Okay. First and foremost, I utilize fair value gaps as signals to me of where price could return to, find reversal points, find points where it's going to, to reach to. And so I like to use, if you're on TradingView, what I use is this guy, FVG. You'll see that, and this is really nice. It draws these as they happen. Okay. After these candles post, it's drawing these. So first and foremost, what's a fair value gap? A fair value gap is a liquidity void. It's where price between buyers and sellers was not properly met, matching buyers and sellers. Okay. Price moved too quickly through that range, and price was not delivered to the buyers and sellers, in a balanced manner. Okay. So what happens is the algos, which run 80% of the stock market, I believe, every day, the trading, the algos are programmed to return to fair value gaps. Doesn't mean it's going to be every one all the time, just so you know. However, they are programmed to touch those areas where there was very, very little liquidity provided at that time. So as you can see on my screen here, we just touched one, since as we're speaking, I'm showing a live one. Notice the gap here. Oh, there we go. I'm in a long trade, by the way. Notice the gap here, fair value gap that was created. What it did is it posted this gap, came down into it a tick. It does not have to close that all the way. And then it sprung up. So we are definitely in a long-term, or excuse me, we are definitely in a long type position now. But it came back in here. You'll notice that there's a lot of fair value gaps. If I go and show you this, this is a good indicator as well. This will show you here. This is going to show you the old ones. So you'll see, I know it looks a little convoluted. You'll see where they came back into. Now I have my settings to delete them as they're posted, but I did this so you could see where they were before. Okay. You see this one right here? They came back right down, filled it. Okay. So fair value gaps are really an important part of the strategy, because people get caught so much into chasing breakouts and breakdowns. Has anybody here ever chased a breakout or a breakdown that will be, you know, like, oh, I got to get in before, you know, it leaves, and you get the FOMO or whatever. So what happens if you enter in, if you're watching my screen at 52.11 and it busts up here, or you get up at the top and it just comes right back, you're like, oh crap, why is it I always get in at the wrong time? It's because you're FOMOing and you don't know that the market and the algos want to go fill those liquidity voids. So you guys learning about them is an entirely different education, but just know that this is an indicator that I use specifically to highlight those to me, so I don't have to waste my time in, you know, in drawing, you know, squares all over, manually drawing squares all over my screen. You know, a lot of times you'll just see them. You know, if I wasn't using that, you could see that there's a void here. You could see that one's happening literally right now on the 5-minute chart. You could see one that already happened. So you could see those already. But I just like to use that indicator because it just takes the guesswork out of it. It really does. It takes the guesswork out. Okay. So if you want to know what else I have a news indicator that simply shows me, you know, when things are going to be popping up. It'll give me a line basically on the time. You can see that. You can use custom settings. I just do high impact and medium impact. I don't care anything, and only USD. I don't care anything about the others, period. Now, ATR, I will use ATR in helping me decide how big of a position I use. So we have been dealing with an ATR that is typically about 3 times bigger, 3 to 4 times bigger than our normal range. So all that's doing is telling me that, hey, I need to size down. You know, this is not the days currently of $40 and $50 range days. So this is, you know, on those days, if you're looking at the very bottom down here, where it says ATR, the standard settings are fine. You'll see it's $13 for every 15 minutes. That's the $13 range for every 15 minutes. If you don't know what ATR is, that just takes the average of the previous, usually 14 candles, and averages out top to bottom to find the range. Whereas if we were to go clearly, you know, at a time that was weeks ago, we're going to find the range isn't 13.7 points for every 15 minutes. It may be 6 points. You understand? Or 5 points or whatever. So I use that to help me kind of decipher what the position size is. So back to the 5-minute chart. I specifically, in my trading, will look for liquidity levels of where the market wants to go. And where the market wants to go is determined by where there is liquidity. Okay. So if you're watching my screen right now, Jen, okay, great. Yeah, okay. Fair value gaps on bigger time frames, Jen, are not necessarily filled as quickly. Okay. So you said what do I do as far as what's the most important? On an intraday basis, day trading. On an intraday basis, my most important chart is my 5-minute chart. Okay. Then it's 3, then it's 2, then it's 1. Now the nice thing about TradingView is that every time I flip, it's going to show me the gaps at all those different time frames. Isn't that nice? So it's like, oh, I think this is a gap here. Do I want to go a little deeper with my price target for entry? Okay, but my basis is 5 minutes. Now that being said, sometimes I'm flipping consistently between the 1 minute and the 15-minute, simply because those gaps are revealed. They may not be present on a 5-minute, but they may be there at a 15-minute, or they may be there at a 1 minute or 2 minute, but not a 15 or a 5. So I'm going back and forth. So if you're looking at my screen right now, and we're talking about liquidity levels are previous highs, swing highs and swing lows. These are going to be where places where market makers, dealers, etc., controllers of the market and the algos will want to take price for liquidity. What liquidity looks like is if retail's buying, they're selling. Okay. In large part, they want to basically bring price to a level that will counteract their action and then drop it down or raise it up. So this is why you'll see, people say, this level right here, this looks like this was resistance. Well, I wouldn't say resistance. If you're looking at my chart right now, 52.63, I don't expect price to go there and bounce down. I expect price to go there and through it. I have no idea how far. So what I'll do typically is I will show you the levels and make those my price targets for you, because I simply don't know if they're going to go 5 points above, 10 points above, sometimes 15 points above. So if you look at my chart, I've got 15-minute chart right here. Look at all these liquidity levels. You're seeing them with dashed lines. Okay. These are all liquidity levels. Now, also, here's a little trick that I like to do. If I know that they want to return to fair value gaps and likely fill them a lot of times, if I'm not finding any discernible profit target or for a swing high or low, like you're looking at today, it's just like straight down, right? What I will do is I'll look at the top of this 15-minute chart and look at the top of these 15-minute fair value gaps, and that will be a profit target. So for example, right now I'm in a long. Personally, I'm in a long. My profit targets are here, 52.63, here, 52.78, here, 52.92, and then from there, probably up further up here. So that's how I find liquidity. If you're having a hard time on the 15-minute, like these moves are so large, then you're more than welcome to go to an hour chart. Look at the liquidity levels here. Okay. That's me. Okay. That's the liquidity level. It's a swing low. Okay. Here's one right here. So these are all marked out on my computer, and I'm always constantly looking for these to ensure that I didn't miss anything. But that's my chart, guys. I literally do not have, EMAs, people. I don't trade like that. I trade looking for obviously the direction of the trade and looking for liquidity pools where it goes. Now, conversely, gamma exposure also plays a factor into my trading style. And so I will absolutely have that as one of the forefront things I'm looking at. So if I'm looking for a long move, I'm going to have Trader Link up. But I don't know if I should go over that now or, or some other time, but TraderLink is definitively an absolute must-have tool, in my personal opinion. Hopefully you guys trust me enough when I say that. It is an absolute must for a tool. But let's see here. You guys have any questions about my screen setup? I know it's not sexy. I keep my screen pretty clean. It's mostly just alerts. Do you guys have any questions on this? What I said was a must. TraderLink. So TraderLink is there's a link in my profile. If you go on Discord, you can click on that, enter the coupon code Kevin, it'll get you 50% off the first month. But it is an absolutely critical part, in my personal opinion, of our trading success. It's an amazing tool. It's been created by those guys, by Mitchell and others. And frankly, it's a glimpse into what market makers and dealers already knew, but we've been able to access that data. These guys have always had that data, but we've been privy to it. Since gamma exposure has become a thing, however many years, the last 5 years or 10 or whatever it is, I'm not sure. But TraderLink, in my opinion, is amazing, and it's the user interface and the workability of it is fantastic. So, I mean, it's kind of a no-brainer to me. I think it ends up costing you like $3 a day. So make sure you get that. Law, you ready to go to the next slide? You have any other questions? Law, you ready to go?
Yeah, I'm ready to go. Let me go ahead and share my screen. I'm going to kind of show up my my charting setup. So
I'll want to stop sharing, correct?
I'll go ahead and do that. Let me make sure I'm selecting the right window.
SVG Joe, what your question? What's the difference between the top and bottom of the FVG bars? What do you mean by that? Sorry, I don't understand. Since my screen's still up,
It is.
I'm
I'll go
on.
ahead.
Yeah, I'm
Oh,
first.
actually, oops,
Okay.
my bad. Go ahead and share your screen again.
Okay.
Was too quick on my part.
No, that's okay. No worries. Okay, if you're looking at my screen here, when I find liquidity zones, it's typically on a 15-minute chart. I'm simply looking first and foremost for swing highs and lows. This here just happens to be right below a gap. Okay, it just happens to be. It doesn't have to be. It just happens to be in this instance. Okay. Here is another level. But what I was saying is a lot of times, in this volatile market, we're not really given very many swing highs or lows, right? Because the price just dumps or it just skyrockets and just runs with small. So when you don't have a lot of pullbacks, that's not creating a swing high or low, is it? And so what I'll do is a lot of times I will mark out for a full fill of the fair value gap. So if I'm not finding any kind of swing highs or lows, which I found one here, if you're looking at my screen at 52.63, that's definitely one. This is one here, and this is not really a strong one at all until you get up here. But if you're looking at here, 52.63, and you're like, I don't find any other swings beyond that, the next highest swing high that protrudes out is 53.60. That's 100-point difference. That doesn't cut it for me for price targets. Okay. So that's why I say I will look for fair value gaps. Then after that, as additional profit targets, because there's simply nothing for me to show. I mean, it's like here and then here at the top. So that's why I said I'll go for a fill of the whole gap. Okay. I'll go for, if I have, especially if there's large gaps, I'll have fills of the whole gap. I'll just place another profit target. Because remember, the algos want to go to those places. The algos want to go to those places. They are places where price was delivered too quickly, was not balanced. The algo literally will see all of these things that and more that you are missing. So they'll want to go fill this, just like where we are right now, guys. Look where we are right now. It's at 52.22. It's almost dead certainty, in my personal opinion, that they're going to want to fill this fair value gap, which is right above us. This fair value gap, which never got touched, by the way. See, they created here. Nothing ever came back up in there. Nothing. So I would almost flat guarantee that we're going to go to at least 52.34, if not fill it and just continue to go up. So the algos are always wanting to retrace. Now they may come back here. They may come back, probably not on the 15-minute chart. But once you understand how liquidity works and understand how that's really the whole game. We're talking about people with billions of dollars at stake every day. This is what the market makers have every single day, whether it's SPY, SPX, futures. They literally have billions of dollars at stake every single day. They need liquidity for their operation, for their market making operation. If they don't have buyers for their sellers and sellers for their buyers, then there's no market. And so that's why I'm saying they have to go to these liquidity zones. This is not my opinion. This is how they work. And so keep that in mind. And they always go for swing highs and lows. And the reason is because so much of retail will put their buy stop orders at swing highs. They'll say something to the effect of this. Oh, 52.63. If it gets here, I'm going to do a buy stop. And so price will go up here. It'll go up here. Oh, we just hit a buy stop. Yay. And I'll go here. Donk. And so every single one of those buyers, almost every single one, just got stopped out. That is how liquidity works. They will take pools of buyers and look to stop them out. You ever see a move like this? Where it goes like this, then it goes like this really quickly, and then it just goes like that. Like a quick move. You ever see anything like that before? For sure. Yep. What that is the market makers smacking buyers and sellers at the same time. So what happens is price goes down. If you're following on my little path here, price will go down. The stop sells will enter. They'll get zapped here. Then the buy stops will go here. And then those will get zapped and the real move's coming to the downside. So if these guys here on the left, who are already sellers, just had a bigger stop loss, they wouldn't have got stopped. But they do this to screw both sides, and then the real move comes. So you'll see times, I will enter a trade, and it'll be after this. I recognize that it goes, down, up very quickly, and then starts rejecting. I'm like, oh, they're going down because they want to go. They just tag the bottom side and the upside. So that's an interesting thing that happens, but it just has to do with the bigger picture of liquidity. The biggest picture is liquidity. And so if you don't know about it, you're hurting yourself. And there's lots of training videos about liquidity. There's lots of training videos about fair value gaps. There's a lot of ways people use them. Some of them are right. Some of them are wrong. But that's kind of part of the style I trade. I'm looking for liquidity. Think like a market maker thinks. Think like these hedge funds think, and you'll be better off. If you're playing the breakout at 52.63, are you exactly thinking like a hedge fund or a market maker thinks? No, market maker would have been here. They would have said higher low, higher high. We already took gobs of liquidity to the downside. So look, we've already started our structure to the upside. Where are they going to go? Here. They could just be trying to fill here. They could be filling here. So you got to put your market maker liquidity hat on. You really do. Where would they want to go to screw the most people out of their hard-earned cash? The market's rigged. Well, I mean, I don't know if rigged is the right word, but maybe it's the right word. The market maker is ran by people that need a lot of liquidity. When you have billion-dollar budgets, you need the counteracting price action. Your buys and your sells counteracting each other. So you need, if you don't move the market right, nobody comes in. Like if the market's just stagnant, it doesn't come in. If the market has some volatility, people are buying and selling constantly. So you need the volatility, but you got to know where they're going to go. So, and if you look for swing highs and lows, that's going to give you your first glimpse. So, shall we move on? Eli, you still there, buddy?
Still here.
Okay.
I'm just waiting for see if there's any
Yes.
other questions about your setup.
No other questions about that, guys? Before we move on. Okay. Going, gone, sold. Back
All
to
right,
you.
let me go ahead and share my screen. I'm going to actually just stop sharing. Oh, there you go. You guys can see my screen.
Yep.
Before I jump into the charting, this is the economic calendar I mentioned in my Forex book. So I really do like this a lot over the Forex factory that most people use. The reason why is because we do have a lot of selections in terms of different countries, the type of currency that you want to use. So your option is almost like whatever you want. Because I think Forex Factory, if I'm not mistaken, it only offers you like 10 or 15 countries, but I haven't used it in a long time. So
It's the major currencies. It's
but
the
it's
major.
amazing.
You have 8 major currencies, and so it does all those plus a few others like China and stuff. Yeah, so it's like 10 maybe 15 currencies tops.
Yeah. So for me, I'm gonna make this bigger because I know my white screen is a little bit too wide, so it may not show exactly too well. But this is what I use. So for me, I actually have a setup where I have two profiles, one for US and one for Globex. So for Globex, I usually typically like Kevin just select the medium and high. But for US, here, let me log in really quick. Give me 1 second. I want to stop sharing really quick because I don't want to show my credentials. Sure, yeah. All right, so for me, I like to use the US one, and I like to show the low. The reason why is because not a lot of people actually know about this, but when it comes to the futures, you have like the 10-year note, you have the 30-year mortgage, the 30-year bonds, even though it is set to low, but they are a huge market mover. So like I think earlier this year, whenever the 30-year bond auction or the 30-year mortgage released, they actually caused a huge movement in the market where we basically bled a lot. So that's why I actually enabled the low for US. But let me move on to charting. So like earlier I mentioned that I was a huge VWAP trader, and when it comes to VWAP, I do use the double VWAP. So you can use the standard VWAP option for indicators. Is the screen too small? Because I know I have a white screen, or should I?
Do you mostly trade through TradingView yourself?
I use TradingView and TOS a lot.
Yeah.
So I have one section where it's TOS where I have a lot of tickers open. So that way, because since I do trade in Q a lot and it's related to QQQ, so I have the Magnificent Seven tickers like Apple, Microsoft, Google,
Yeah.
Amazon open. So that way I can follow exactly how they're trending.
Got it.
So as for VWAP, keep in mind that VWAP is a volume weighted average price, meaning that it only works intraday. So if you're trying to use, say for instance, maybe like I go to 1 day, VWAP is not gonna work. But it only works on the 1 minute time frame. So if you ever do use VWAP, you have to use on the 1 minute time frame. Otherwise it won't work. So that's why like in TradingView, you see how the session opened, you can see the VWAP right here, where it just opened from open to close. And here's open to close. And for me, VWAP is a huge indicator of whether if I go long or short. You see this purple line, if it bounces off the VWAP, then that's where I'm gonna go long. If it goes and rejects the VWAP or breaks through the VWAP, then that's where I'm going short. And this is something that I actually use like the Bible. For instance, if I ever get in trade, I always check VWAP. Where am I at? Am I near the VWAP? Am I away from VWAP? Am I going to use am I going to go long or short? It's all based off of this indicator. And also the main reason why I use the double indicator, because typically your standard deviation is, here, let me go ahead and delete this. You have 3 bands. You have the VWAP, you have the upper band, and you also have the lower band. But if you were to use the double bands, you can kind of use like the EMAs. You see how it kind of respects the upper bands where it hits this upper band? That means there's a likeliness of it's going to go ahead and reject because we went too far away from VWAP. So one thing that I like to kind of use VWAP is VWAP, the market will always try to go as close as VWAP. So if we're too far away from VWAP, it's going to come down. If we're too below VWAP, it's going to try to go back to the middle. So it's kind of like a magnet, so to speak. So that's why I use a lot, and it's really useful in terms of going longs or shorts. Then the other 2 EMAs that I usually use is the 133 that also works on the 1 minute time frame, and 233. Because whenever it comes to these indicators, they also work really well. So let's say, for instance, earlier today, during Globex, it rejected, or actually it bounced off of this indicator, which is the 233, I believe. Yeah, 233. And you can actually use that as a support and resistance. Then with the 133 also respects, you can see how it respected this right here and bounced off of this. And that's when you know you can go long. The other indicator that I usually use trying to find levels is also autofibs. So one good thing about TradingView is the standard traditional Fibonacci's, you do have to make your own drawing and you select the lows and you select the highs. But with autofib, it selects for you. So I don't even have to do any of the work. I just automatically and go ahead and just turn it on. And I do the 10 to 20 settings, and it'll just go ahead and map it for me. So if you can see right here, let's kind of scroll out a little bit. This is the 1 minute time frame. It's you go ahead and marks the price from the lowest of the range, and it goes and draws to the top of the range. And that's how you get your Fibonacci levels. Then I also use Fibonacci's on multiple time frames where it's like 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, and also 4 hours on 1 day. So like right here in my other tabs, I do have a lot of different indicators or a lot of different time frames, and this gives me a overview of the market, exactly how the trend is moving. But let me go ahead and turn off a few indicators. So let's do it now. So when it comes to Fibonacci's, I do like to use the bigger time frames. I like to use the 15 minutes and also the 1 hour a lot. So Fibonacci will allow me to see the levels where it automatically maps for me. So like right now, I know that, hey, there is a support around this level, and also I can just kind of use it as a gauge of where do I enter and where do I exit. So like say, for instance, right here in the 1 hour time frame, the 17,966 level is a really good level because I see that it bounced off this level a few times. And it also went up to 15,379. Is my screen too small, or are you guys able to see the screen? I just want to make sure. Let me see when I spend it out. Here, I'll actually change it to a different time frame, to the single panel one. That might be a little bit better for you guys. So here, let me zoom in, and let me see if we can span this out. All right, this should be better. So you can see how it kind of respects the Fibonacci levels, where it bounces off a few levels and it just goes in between that range. And that is another place where, when it comes to creating a training plan, I can go ahead and say, hey, if it bounced between 17,966, my plan is to probably S around 18,397, depending on my time frame. So with the 1 hour time frame, maybe a little bit too big. Let's go ahead and move it down to maybe 15 minutes, because that's usually a little bit better. And if you look at the 15 minutes, you can kind of see they're pretty much the ranges that you can use. And you know that I'm a huge scalper, so I like to take my profits quickly. So whenever I enter something, I'm going to go ahead and make sure that I have my stop loss and also plan my profit taking targets. So this is where I use the Fibonacci levels as my profit taking and also stop loss. Let me see what else. I think that's pretty much it for my indicators that I primarily use. I try to keep it as simple as possible. So my main indicators are just VWAP, the two EMOs that I mentioned for the 1 minute time frame, and Fibonacci's for support and resistance.
Scott asked, how big of a stop loss do you use?
How big of a stop loss do I use? It really depends on the market conditions. On average, I usually use like a 10 to 15 point stop loss. But if I size down, I do have a wider stop loss where it could be like 20
Trading
points.
in Q or trading ES?
Trading in Q.
Okay. Just so there's clear on that.
Is there any other questions before we move on to the next slide?
Yes. Well, Scott also, as far as stop loss, and I can't speak for you, Law. When I search for a stop loss, if I like the entry and everything like that, my stop loss is going to be $1,000 for a 50K account, for a 50K prop account. I don't want one trade busting my account, because everybody's wrong, sometimes. And so I use a set dollar stop loss. Some people are comfortable with 500. Some people are comfortable with 1,000. It's different for everybody. It's different for the size account you have that you're operating. If you're operating a prop firm account, if you're operating cash futures, it's no different, meaning that, your stop loss could be $1,000 cash. And so you have to consider a fixed amount for that trade for a stop loss, in my personal opinion.
And the other thing is, if you do want to create stop loss, you can use indicators as a stop loss. I know the most common stop loss, or I guess most common indicators that people use, are the 9 and 21 EMAs. So for instance, let's say right now I have here, let me turn this off. So that way it won't
Now,
be messy.
when do you want to discuss the ATM settings? Because ATM settings could do your job for you.
Oh yeah, that's something that I will kind of talk about it once I go into the trading platform itself and how to set the ATM settings.
Sounds good. Sounds good.
Yeah, so when it comes to stop loss, like say for instance, maybe if I'm using the 15-minute time frame, or maybe let's go down to 5-minute time frame, because 15 minutes may be a little bit too much for some people. So my 15-minute time frame is, if I see that it's bouncing off of this EMA right here, my stop loss could be potentially down below here, whereas the purple line. Sometimes people do use fibs where like the fib is respecting this level right here, and that could be my stop loss. As long as it closes above this blue line, then my stop loss is going to be where this 17,934 is at, and that's my stop loss. So it really comes down to your trading style and trading strategies, dictating exactly how much you're willing to risk and lose. Does that answer your question, Scott?
I believe so. You said makes sense.
Okay. Let me go and switch screens. All right, so we already covered the technical analysis. Now let's move on to the different types of trade setups and also trade management.
Okay.
So when it comes to a trade setup is just simply exactly why you're entering a position, what causing you to go in. And as for trade management is after you go into that position, how do you manage that position? And that's something that is really critical because most people, when they enter a position, they don't have a clue exactly where is my stop loss, where is my profit taking targets, and they just kind of like just enter without a solid plan. And this is where the trade management portion comes in. And this is where ATM is really critical because ATM stands for Advanced Trade Management. This is where you can take profit taking targets and also set stop loss targets. So I know, especially for me, starting off when I was trading futures, I had a huge issue not respecting my stop loss and also my profit taking because of greed, or maybe I'm hoping that it's going to bounce back. And with ATM, it completely cuts that out. So once I set that ATM, unless I press cancel and cancel that order, it's going to automatically take that I guess whatever order I set and execute without me having to second guess myself, or maybe I won't be able to go ahead and cut my loss.
Hold on, just Barnabas. Are you're trading futures, right? I mean, I just to be clear, you're trading futures, right? Okay. He's using TOS. I personally don't use TOS for trading futures. Tradeovate is what I use for trading futures if I'm not doing a prop firm. And honestly, I've moved prop firms over to it when I can. So can you speak to TOS, Yulaw? As far as how is it for futures? And he's asking about fidelity as well.
Let's see. Well, I'm trading. So the question is, due to computer and work restrictions, I'm in a pickle. I'm trading using TOS, but have charting options and fidelity. When trading ES futures, can I go off of XPX? If I do NQ futures, can I use NDX? That's a good question because I don't have fidelity either. I mean, I did, but I don't use it.
Man, Barnabas, are you able to utilize Tradeovate as your broker? Okay. Well, then do Tradeovate's much more user friendly. It is geared for futures trading. Now, Barnabas, are you trading prop firms or are you trading cash? Cash account. Cash. Perfect. Okay. So Tradeovate also is great for cash. Okay. You have all these tools at your disposal. There are certain brokers that are simply not made for futures. You know, they don't have the features, they don't have all these things going for them for the futures type trading. You know, maybe they're set up for options, maybe they're set up for, you know, shorting stocks like some of the brokers are. It just depends. So where Tradeovate shine, I mean, Tradeovate is for futures and it's built for easy execution, quick execution. It's built also for automated execution with your ATM trading, ATM settings, excuse me. So I highly, highly recommend you go to Tradeovate. And here's a nice thing about Tradeovate. As soon as you wire them money, cash, they're going to credit to your account within probably 2 to 3 hours on average. It is not a next day. It is not even, 2 days. It is 2 to 3 hours, and you'll see it in your Tradeovate cash account.
And also it's margin friendly too, because I know like
Yes.
EOS and maybe like
Yes.
what's another platform like Swab or
Yeah.
Speed. I actually like Speed is okay for futures, but like Fidelity, I don't know if you can do features or not, but if you can, I don't think it's margin friendly at all.
Yes. Tradeovate has web platform, but they also have software to install and download too on the desktop. So they also have a phone app etc. One nice thing also about Tradeovate is they have risk management settings to where you can set, a certain dollar amount that you're only willing to risk for the day, meaning, if it's $1,000, you set your daily profit loss threshold and your profit taking threshold. And so, if it's $1,000, loss and 3,000 capped on the profit, you have those choices for settings. So that's a nice thing too, is because it will handcuff you once you reach a profit level that you establish ahead of time when you're thinking clearly, to not become greedy, overtrade, lose it. It'll just lock your butt out. So keep that in mind. That is a really, really handy tool.
which I'll cover in a few moments.
Yep.
Also,
Okay, cool. Okay, awesome.
is there anything you guys want to add, or Kevin, you want to add before I move on to the actual kind of interactive session for like the different type of brokers that or platforms we'll
I
cover?
think we're good. We were just answering his questionnaire, so he looks to be satisfied.
All right. So I mean, like, I don't think we need to cover like position sizing and scaling and like trailing stops and profit targets. We'll cover that in the interactive section. Let's go ahead and change screens. Let me see. Let me log into TradeAway before I share my actual screen really quick. All right, switch sharing. All right, can everyone see my screen?
I can see it.
Okay, perfect. So when it comes to TradeAway, whether if you aren't, I don't know if you're doing futures already, or maybe you're still undecided if you want to go cash or if you want to go prop firm. TradeAway has this really nice program where if you use any type of email account, whenever you first sign up, they give you 2 free weeks trial version of a simulation account. So I would recommend just use whatever type of throwaway email account, or maybe just go ahead and go to Google or Yahoo and create one. And by the time your 2 weeks are up, then create a new TradeAway account. And the cool thing about it is it actually gives you like a full version of what it's like to have a cash account. So earlier, Kevin talked about setting up your risk management tools. If you were to go into kind of like this little 3-line thing right here under application settings, there is a option where you can do risk settings. Under risk settings, this is where you can set exactly how much am I willing to lose, or how much am I willing to like kind of stop in terms of profit taking. So daily loss, I can set to whatever amount I want, whether it's 1,500 or maybe like 5,000. It really depends on your risk tolerance. You can also set a weekly loss limit. Exactly how much am I willing to lose per week? The other
One thing
one
I want to clarify on this, one thing I want to clarify on this specific screen.
Mhm.
Some prop firms block you from updating this.
Oh yeah, like take profit will lock you, but I think Apex and I think Top Step may allow you to. I can't remember if Top Step does.
Well,
Yeah,
Apex definitely, this actually came up the other day. So guys, if you are using a take profit trader account, you better make sure to use the ATM settings, and you better make sure that your stop loss is in place, because as soon as you hit their daily limit of whatever it may be, that actually busts your account. It's not a daily limit where they lock you out for a day. I need you guys to understand that. And so you have to have that in place. They do not allow you to update anything with Take Profit Trader in your TradeAway account. My guess is if they start hearing people complain about it enough, they'll probably do it. That's my guess. But that being said, you need to make sure to utilize these settings when you can.
and also the other thing is a lot of people think daily loss limit will save them. Let's say, for instance, right now you can use this feature for Apex, but to a certain extent. What this feature is great for is whenever you have not traded for for that day, and is to save you from that one bad trade starting off. But let's say, for instance, if I was doing really well and I made 5,000 during the day, and my daily loss limit is 1,000. What's going to happen is, since I made $5,000 of realized profit already, it's going to stop me out once I lose $6,000, because not only do I need to lose that 5,000 first, but I need to go into negative 1,000 before it stops me out.
Yeah, it's not a trailing loss.
Right. And because since Apex is a trailing drawdown, then that's where you have to really be cautious and be self-aware of exactly where you're at. So if you're
So
in the profit,
cautious. So cautious.
yeah, this will not save you if you're in profit. I learned it the hard way, so just take it from me.
Yeah, now if you're using a prop firm that calculates end of day, this will save you at least on your maximum. But be smart, guys. On the trailing drawdown, that's going to be your absolute maximum loss. It's not going to save your butt for being a dummy and making $5,000 and then losing six. At that point in time, you need to take a look in the mirror.
Yep. And that's where I would recommend, if you are using daily loss limit, you
Daily
definitely
profit trigger.
use your yep, daily profit trigger. This way it'll stop you out. So if my
Yep.
daily loss limit is going to be 1,000, maybe my daily profit trigger is going to be either 1,000 to match the 1-to-1 ratio, or maybe 2,000. So that way, if I were to make 2,000, I'm done for the day.
Yep.
There's nothing in there's it's going to stop me from trading unless I go ahead and make that effort to disable the setting.
Yeah, and if you guys looked at my channel today, this exact same topic, you all, today I posted my profits. They were for my top step accounts, but it was locked out profits because I had a $3,000 daily profit trigger on that account, and that's why you saw my profit was $3,004. And so, that being said, I utilize these. I find it to be honestly a must. I find it to be critical. So if you're not using these, please start, guys. And I know with top or with take profit, they won't allow you to do that, but a lot of the other firms will. Obviously, with a cash account, you can, but yes, make sure your daily profit is higher than your daily loss, simply because we want our profits to outweigh our losses. Doesn't have to be a ton higher. You can have $1,000 loss limit and maybe $1,500 daily profit, but ensure that your winners are outweighing your losers, especially if you're a 50% trader. 50% winning trader.
Yeah, exactly. Then also there is if you have a cash account, you can also set your either end of day trailing, or you can set real-time trailing like Apex. Then
Nice.
if you really do have trouble kind of managing your position sizing, then you can also kind of limit yourself exactly how many lots do I want to enter per position. So that is something that you can also set restrictions onto yourself.
Now, Miguel had asked about if anyone has the RR table, the risk reward table. Miguel, please understand that risk reward is great, but in doing it just straight up only caring about risk reward ratios, it's actually performs much worse over the long term compared to a fixed dollar amount. You can actually go online and find that. You can find videos and stuff where they actually go and calculate and show you things like that. Just doing risk reward, 2-to-1 or 3-to-1 or whatever it may be, versus fixed dollar loss and fixed dollar target, and it outperforms it dramatically.
And
So
sometimes it also prevents you from making that necessary profit taking, because you're so adamant about, oh, I want to do a 1-to-1 ratio or a 2-to-1
yes,
ratio. Then before you were just waiting for that moment, but then you watch the market go the other way. Then you're like, oh crap,
yes.
I just lost
Like I
money.
had to get 3-to-1. I had to get 3-to-1. Well, it only went 2.4-to-1. Sorry. And then it reverses on you. So But one thing you definitely do need to make sure, just keep it simple, guys, is always make sure that your profits are further than your stop loss. Okay. That's like trading 101. At very least 1-to-1, preferably further.
I mean, I think this should be big enough so everyone can see this. So whenever you do get a trial version or a simulated version of TraderBait, they do give you a $50,000 account. Let me zoom out a little bit. So I was trading on it earlier just to kind of like test it out, see if I can actually change the account size, but no, they cap you at 50,000. So it is a really good platform to use if you ever want to practice. And also when it comes to ATM, to set up ATM for TraderBait, I always use a DOM. So and you asked me like how do I set up a ATM? And it is right. Sorry, I'm a little bit rusty since I don't really trade on TraderBait that much. So it's under your charts. So let me zoom out a little bit because I think the
Yeah, you
all right.
see, yep,
Yeah,
you
the
see it.
view is
Okay.
kind of weird. So if you look at your chart and you select the ticker that you want, there is a section called ATM. Here, I'll zoom in just for people that may have trouble seeing.
There you
Right
go.
now it's currently off. So you do want to kind of set it up where if you click on this cog wheel right here, you'll enable ATM. You type in the name. We'll just do. Actually, I have one set up. Let's just do a new one. We'll do 30 ticks or 30. Yeah, 30 ticks. Then you can also select the ticks or you could select the value. It really depends on what you want and your trading style. Then also, and whenever you see the type, you have take profit type, stop loss plus stop loss, or you could do stop loss only, or you could do profit taking only. So keep in mind that if you're doing group trading for TraderBait, and if you're especially if you're using this UI, you cannot use ATM in group trade. That is just one of those policies that they have. They won't allow you to use ATM in group trading. But if you're trading one account at a time, then most definitely use ATM. But I would also offer alternative solutions after TraderBait, how to do group trading with ATM later with other platforms. But for now, if we're only trading one account, this is how you set up the ATM. So take profit and also stop loss. This is where you indicate, once I enter, let's say for instance, right now I enter at 18,000 for NQ. I want to set my stop loss to 30 ticks. Or I guess I take profit to stop loss at 30 ticks, and my take profit is probably like, let's say 60 ticks. Then after that, then you can set your type of stop loss. You can do a stop, which is going to be a market order stop, or you could do a trailing stop, trailing limit, or you could do auto break even, or auto break even plus auto trail, which is pretty cool too. Meaning that once it gets to a certain threshold after your position sizing, then it automatically moves that stop loss to break even. So that way you won't lose money.
Yeah.
So it's great, especially if you have multiple multiple
I use
lots.
that as well, guys. I use it, by the way. A lot of times I will use that, especially if I'm scalping. Is the break even one. If I'm doing something well, like today where I let it run for a couple hours, I'm manually adjusting stop losses. But yes, the auto break even is a fantastic tool if you are scalping. Oh, the break even offset. That's also something you can you pull that up again? If you scroll down. Where's the break even offset? Let's see here. Scroll up. Do the stop loss type. Do the auto break even plus auto trail. Might be under that.
So I think you're doing it where it's like a profit target is or a profit trigger is
Well,
is where
something called a break even offset also in Trade-Evade. I'm not seeing it on your screen.
let me change it. Maybe it's because we're not using the auto break even.
Oh, there you go. Okay, do that. Do that one right there. AB, hit that. Nope, hit the AB again.
Yeah, that's why you see it right here.
Hmm.
Anything else?
We'll move on. It's not critical. I assure you.
Oh yeah, so actually, I was kind of blindsided. So if you use the DOM a lot, there is this section right here down below where you can go ahead and set your ATM that way. So, but keep in mind that whenever you use TraderVate, especially with this UI, once you enter a position without having the ATM enabled, you cannot apply the ATM after the fact. So if you ever want to use ATM, you have to do it before you enter a position. Otherwise, it won't stick to that order. So afterwards, let's say for instance, I accidentally maybe not enabled the ATM and I want to go ahead and manually set my stop loss. And that's the only way for you to do it. I do it through a DOM. So right now I'm going long. I just go down and I right click on the areas that I want to set the stop loss. So whenever it goes down to this level, it'll automatically close me out. And that's pretty much how you set the ATM and also the stop loss for TraderVate. Does anyone have any questions before we move on to the next platform?
Any questions, guys? Okay.
All right.
Moving
Silence.
on.
All right, moving on. Next one will be NinjaTrader. Let me go ahead and log into NinjaTrader before I switch to NinjaTrader on the share screen.
The break-even offset, what that is you can establish the offset above break-even. So instead of being exactly break-even, you could set it, let's say, 20 ticks, so 5 points above your break-even, and that's what the offset is. Let me see if I can find it for you.
Yeah, if you can find it, I'll stop sharing so you can share.
Let's see. Just go ahead and carry on. I want to make sure I don't want to get lost in that. It's a minor thing that is. So go ahead and do that. So I don't have to go figure out my credentials and all that stuff.
Okay.
Yes. It's a minor thing. It's just going to be one of the subsettings of break even. So play with the ATM settings.
Okay.
There, yeah, just look for it. And what simply all that is that instead of putting you at your entry level, let's say you got in an NQ 18,000, normally your break even will be 18,000. But if you did like, let's say 40 ticks, 10 points, your break even, once that thing triggered, it wouldn't be 18,000 break even, it would be 18,010. So it'll set that above. So what happens there is it's actually creating a guaranteed profit for you versus an actual break even.
Okay, let me go ahead and switch screens real quick.
You're trading right now. I see it. See, you got an open position long on NQ.
Wait, which screen do you... Oh, I see. Yeah. I mean, that's whatever. It's demo, so I don't really care.
Oh, okay. Sorry, I thought you were trading.
You kind of scared me a little bit.
Well, I mean, it was a live trade. I was like, he's going for it.
Okay, so
rolling with
can you see my
VC.
screen now? Let me go ahead and minimize this
That's
this
funny.
window. All right, so now you should see my NinjaTrader account. I'm not gonna go into kind of in depth how to set up your connections. You can always there's plenty of like videos and articles for each platform or cash account how to set up the connections. But for me, I mainly do Super DOM for NinjaTrader. And I know earlier I mentioned that I use pivot points for one of my indicators. So NinjaTrader has a really good pivot point tool where it kind of, if you open up data box, which if you go to any one of your charts, if you click on data box, it will show you all your indicators. It'll show you like the actual points of, I know it's kind of hard to read. Let me see if I can make it bigger. Yeah, sorry, I can't expand this. Maybe you can zoom in through Zoom, but the data box for NinjaTrader, it actually shows you like time frame, all your indicators that you have for that chart. like the price levels, then also where VWAP is, then also the pivot points. And the pivot points is actually really nice in order for me to see which level it is. So that's why I also enabled on my other time frame the pivot points, so I can kind of see it on the chart. But as for the ATMs for NinjaTrader, let me go ahead and do this. The ATM strategy, if you look at the DOM at the very bottom, it has an ATM strategy. This is where you're gonna have to do a little bit more legwork to set it up because they don't have a predefined one for you. So I actually spent the time to kind of set up different type of strategies. I don't know if you can see on your screen, but I basically have a one for like different type of stop loss for ticks. Then I also have one for points. So I have various ones where it's like 30 tick stop loss. I have a trailing stop loss. I have a like 16-point stop loss. So that is something that I can add after the fact. So for instance, right now, let's go in our trade right now. And one cool thing about NinjaTrader is if I have multiple accounts, I can apply all that ATM, or actually, let me go ahead and I'll do it later. I can apply that ATM after the fact, after I get into a position, or I can go ahead and apply that ATM for all my group trading at the beginning. So whichever works for your trading style, you can do whatever. So once I get in a position, I just right click on the position that I have, and there is a apply ATM strategy where I can select whatever type of strategy I want. So for instance, I want a 30 tick stop loss. And now you can see on my screen right here. Let me see if I'm getting it bigger. You can see that there is a stop loss order where if it hits that line, it's going to go ahead and close me out. Then it's kind of the same as TraderBait, where I could set profit targets and also stop loss at the same time. So you can kind of play around exactly what you want to do. And the other thing is you can also set I believe, break even. Let me see. It's been a while since I've done this. Profit target. Da, da, da. Okay, actually, this is why. So for NinjaTrader, you won't be able to do automatic break even, but you can do it Coin Tower, which I'll cover in a second. But for NinjaTrader, you have different options. You have reverse at stop, you have reverse at target. Then you also have chase, which I don't really use. But the main
Ron, your opinion, if they can avoid NinjaTrader, should they?
You said avoid NinjaTrader?
Yeah, I mean, I can't stand compared to Trade-Evade. I said if I have the option, like there's no other option, then yes. But if I have the option to avoid NinjaTrader for futures trading, I do it now.
Well, for me, it really depends on your situation. NinjaTrader is the best in terms of you have multiple platforms and also multiple types of accounts. For instance, if you want to, let's say I have like 5 different firms and I have all NinjaTrader can combine all of those accounts together under one. So I could connect 6 TraderVate accounts or maybe 10 TraderVate accounts all in one sitting. Where if I were to use the TraderVate UI, I can only access one platform at a time. And
Got it. So you can have 6. You have I did not know that. See, that's new news to me. So you can have multiple prop freight companies, multiple prop firms that you're actually trading on NinjaTrader. I did not know that.
yeah. So that's why I have all these settings right here. I have
Got it.
Apex TraderVate, Rhythmic, Blue Nuts, Take Profit, Top Step, ETF. So one thing to remember for TraderVate is you can have unlimited TraderVate accounts, but only one Rhythmic account. So if I were to have multiple Rhythmic accounts, then that means that you need to either have multiple license for Replingo, or you need to use Coin Tower. And whenever you do copy trading, you do need to pay for that application. For I think it costs like $150. It's a
to use it with Ninja Trading.
You need to use it for NinjaTrader, correct?
Yeah, yeah. Because Trade-Evade it's included. You can group things in Trade-Evade. If you use Trade-Evade, you can group with the same firm. you can put them in groups and then copy trade that way.
Right. All right, let's move on to Quick Tower. Actually, before we move on, do you have any questions about NinjaTrader?
You answered one of mine, bro. I didn't know you could have a bunch of different firms on, I was just rolling with Apex accounts on there. I didn't know.
Okay, let's go ahead and open up Quick Tower. Do I have Quick Tower? Okay, I need to set this up. Give me 1 second. I'm just opening up Quick Tower right now. Let's do this to my. Okay, it's opening right now. So let me close this position out.
Order filled.
Yeah. Quick Tower should
Appreciate you
pop up.
guys staying with us. I know we're rolling at about 80 minutes now, so thank you for staying with us and learning. I know for some of you guys, it's been a long day, whether it's work or, trading, having your eyes glued to the screen. So thanks for sticking with us, by the way.
All right, right now, Quick Tower is loading up. Okay. So one thing you have to keep in mind for Quick Tower is you can only use Rhythmic accounts for Quick Tower. It does not support TraderVay accounts whatsoever. So but the good thing about Quick Tower is if you have multiple Rhythmic accounts, as long as you're willing to pay like I think $70 or $80 a month, they allow multiple Rhythmic account connections, meaning that if I have Rhythmic accounts in like Top Step, Take Profit, Apex, I can connect all those together and using the built-in trade copy. I know it's kind of small right now. Let me go ahead and lock this and see if we can maximize the screen for this one. It may be a little bit too small, but you can set up different accounts where I can connect all of them together. I can connect one firm at a time. And the good thing about it is you have to pay for any like add-on trade copying program.
Joe says thank you, and Scott says thank you. Chris says thank you. So you're welcome. You're welcome, guys.
Thank you for taking the time.
Thank you for for taking the time to do this, and this is gold. So thank you guys for your kind words. Appreciate that.
Then as for Quick Tower, one of the best things is once you get into a position, you can actually like kind of like the same thing as NinjaTrader. You can apply your ATM after the fact once you enter. But the cool thing about it is your Super DOM. Let me see, Super DOM. There's not really a way for me to zoom in, but so you guys are gonna have to zoom in on your Zoom. There is an automatic button for break even. So if I'm in the profits of maybe like 10 points, and I'll go ahead and set that stop loss of break even, I click on this button, and it'll go ahead and set that stop loss at break even. And that's the one cool thing about Quick Tower. Then as for that, that's pretty much it for the platform training. I don't really have anything else.
Anything else back to the slides or anything? I didn't know if there was any more slides left.
Let me see. I think for the slides, there's nothing else. It was about covering trading platforms.
Okay, guys. Now, if that's the case, then we have time for a few minutes here to answer any questions that you guys may have. That you have us both sitting here, ready to answer questions, vent your frustrations, whatever it may be. Hopefully this helps you guys. If you are not trading, first and foremost, prop firms, and you want to trade futures, I suggest prop firms to start out with because your cost of entry is significantly lower versus doing cash. Both Ulaw and myself, if you go to our Discord profiles, we have affiliate links you can click on and join some of these different prop firms. That gives us credit for that, and it's just a little token of appreciation that we appreciate as well for the work that we do. So please make sure you do that. If and when you want to get into prop firm trading, use one of those links as well. But if you guys have any questions, please let us know. Did I mention there was going to be a different interactive training session, or was I mistaken? What do you mean, Scott? I'm sorry. I apologize. What do you mean by that? There is a third class. Is that what you mean? Are we doing another? Okay. There is a third class. And Yula, do you recall what we're covering on that?
Yeah, we're covering risk management and psychology, which is, I think, the most important part of this session, because anyone can enter a trade and exit a trade. But at the end of the day, you can be the best technical analysis reader or have a good trading plan, but without risk management, it's just simply gambling, and you won't be able to hold on to that money.
That's absolutely right. And you have to have your emotions under control, right? It's just, if you don't have your emotions under control, then it's going to be a hot mess. And so the thing is, at least for me, is that you have to go into a trade knowing where you want to go. It's not willy-nilly, just hop into a trade and whatever happens, happens. You have to know where you're going and where you're going to stop if it doesn't go right. Okay. So there's a lot of folks that just jump on trades, and they don't have the full perspective of where they want to go and what they want to do with the actual freaking trade, right? And they don't know what a good stop loss is. They don't know what swing high liquidity levels or swing highs or swing lows. They don't know about an ATR, as far as how market's currently moving at at what pace it's moving. They don't know about these things, and they just know they don't want to miss out. And I get questions sometimes, is this a good entry point? And so the thing is that I've entered a trade already considering my stop losses and take profits already. And I may have entered it 30 points ago. That doesn't make the trade the correct entry for you who just logged online, because much of the move has already happened. Like, for instance, today I had people asking if they should enter a trade, and I was legitimately, I think, already 60 or 70 points into the move in my direction. And so, I mean, in hindsight, yeah, it got another 30, 40 points, whatever it was. But at that point in time, I was already clipping off profit-taking levels. So you have to make sure you step into a trade with a plan of where you want to go. You must do it. And then you have to consider, obviously, the stop loss. Don't try to make the trade fit your bias. You need price and your setup to come into a place that's going to fit your metrics. Okay. I don't, for example, here's an example. Oftentimes with normal position, I have a 10-point ES stop limit, okay, or stop loss. I wait and I look at the existing places where I would have a stop loss. I wait till one of those entries comes in to where it gives me that 10-point cushion under normal circumstances for a stop loss that's a solid stop loss. Otherwise, market could retract. If I chase something, otherwise market could retract. My stop loss is still a good stop loss number, but I was a dummy and didn't wait for price to retract into my area. So you must have a trade plan before you ever click buy or sell. You must. And if you're in futures, there's no messing around, guys, because futures move so quickly. They are not, they're not options. Options move quickly too, but you don't have IV and things like this and stuff that can inflate or deflate a position. Futures, you could be getting in a spot where it rips against you simply because you did not pay attention to pullbacks. You didn't pay attention to swing lows for your stop losses. You just got in because you wanted to get in. So, because you didn't want to miss a move. And it's usually FOMO. Usually it's FOMO is, the fear of missing out. Guys, it's okay to not trade. I mean, this is kind of a preview, I would say, of the third class, but it's okay. It's okay to miss a move. So some of y'all needed to hear that.
There's another question where Scott says, often I know where I want to go, but then I see profit and the fear of losing it kicks in. So I don't hold it all the way to my target. Then I watch it go and hit my target and wonder why I sold. So in this case, just to kind of give you I mean, we'll cover this also next week, but I mean, if you're having that type of FOMO or you're having like regrets of selling it too early, then that's where you size down to micros, because micros allow you to have multiple opportunities to either trim or to hold longer. So that way you can kind of kill that feeling. Because if you're just like buying minis, you're probably only buying one or maybe two at most, right? Then the opportunity is not there. But if you were to buy one or two minis and convert that into micros, that's at least 10 to 20 micros. So you have so many opportunities to trim or to hold longer.
Yeah. And the thing is, guys, if we should have answered Scott, to your point, to your question. Tonight we've talked about liquidity. I've talked about liquidity and fair value gaps. These are specific ideas and tools that will help you know where they're going. Okay. Those are specifically things that you should be using at your disposal to figure out better stop losses and better entries. Simply because your swing lows, for example, when your swing lows may get violated and it starts setting up a structure that is a counter move, like you've been in an uptrend, and now it looks like it's starting to set up a structure. So that's why you would have stop losses at certain swing lows, because once those are violated, you're like, okay, it's time to probably go out, because now they've actually started to create structure. Now that's called breakup structure, change of character. So change of character is something you'll want to study on YouTube. And all it's doing is saying higher highs, higher lows, or lower highs, lower lows, to where the market is definitively shifting directions. So if you see that the lower high, or excuse me, if you're in a long and you see that your higher highs and higher lows is still maintaining, that's going to give you some confidence. If you see that your liquidity levels are not being violated on the lower side, that's going to give you confidence. If you see that fair value gaps are holding and your your stop loss is below those gaps, that's going to give you confidence. Yep. And so, and the thing is too, is that market makers will go from liquidity zone to liquidity zone. And these are all swing highs and lows, and your liquidity voids as well, fair value gaps. That's where they're going. Now they're not going to necessarily target fair value gaps. That's not necessarily. They're looking for swing highs and lows the most. If you can't find any, like on a straight up or straight down move, that's where I will also use fair value gaps as my targets. Okay, but I'm usually using the 15-minute chart swings high and low to find out where they want to go. Okay. Does that make sense? Use the swings. Use the swings.
And if you have trouble, then try the fib retracement and see if that works for you. So whenever it bounces off of the fib level, then just go long and trim the next fib level. And you also practice with that too. So it really depends on your trading style and what works best for you.
Yeah, I'm gonna share my screen real quick. He's asking me about when do I draw them? Can you see my screen, guys?
Yeah, I can see your screen.
Okay, perfect. Okay. So you're looking at it right now. I just go to the 15-minute chart. This is because I trade on an intraday basis. If I was trading, let's say Forex, or if I was trading, a bigger time frame, the daily time frame, I'm not going to use the 15-minute chart. This is because I trade at intraday levels. Okay. So 15-minute swing highs and swing lows. You see it down here, 51.81. Market with an alert. Swing high up here. Market with an alert. Swing high at the very top up here. See that? It's a swing high and swing low. That's simple enough, right? And so the only thing where I maybe add additional ones, I have one right here, because I noticed it came down. Sometimes I slip on a 5-minute just to make sure. Okay. So this reveals also, like if it's a straight down move, like it was today, seemingly, right? Seemingly. But these levels right here, because we're in such a volatile market, these are actually creating considerable distance between profit targets. So this is on the 5-minute chart. I'll even use this. So I'll say profit target here. Okay. Where are my profit targets? I got it down here on the bottom. Here towards the top, excuse me, at the bottom is the liquidity level, but they already took it. Here, 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 here. So if I was signaling this to you guys right now, guys, I would say profit target 1, profit target 2, profit target 3, profit target 4. You understand that? Okay, right on. Usually the 15-minute chart reveals them, but when it's just a smooth, it looks like a slide straight down like it was today, it's harder. So I'll pull up the 5-minute. Now, once, like, let's say, for example, when we started dumping like hard for the first time, a week or two ago, I had to start going out, and I still have to do this right now because we're entering into territory we haven't charted in a while. Okay. Whether it be a month or 2 months or whatever. So now I have to go to the hour chart. See, I even need to go further than that. So on the hourly chart, I'm already marked up over there. What did I do? I marked, let's see here. These aren't right. One of these is not right. It's not right. So I will mark this level here, but we already hit it. So that's not a liquidity level anymore. But ones we haven't hit down to the downside right here. Okay. So for example, this level here and this level here, those are the ones I'm interested in. These are levels that are right near, and when they are right near each other, like it's like lows, like boom, 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 stacked on top of each other, I just take the lower one. So you see how this is here, 50, 50, 36, and then this one is like 50, 20. I'll just take the lower one. And so you see these here, these are kind of staggered, boom, boom, boom. They'll just seek the big one. 49.65 is major liquidity, for example. And even more so if I tick this down just a little bit to cover this one and this one over here. Okay. So these may not seem like these are big zones here, but this is 25 points. That's, when you're on the hour-long chart time frame. So, but on an intraday basis, it's the 15-minute chart. And if the 15-minute chart is just too smooth because the move was too fast, too smooth, I'll just use the 5-minute chart, and that'll help kind of reveal some things like I just did with you guys here. So I had to go to the 5 and see how this revealed swing highs, because what's going to happen is retail is going to see this and they're going to say, oh, if it goes past 52, 63, then I'm going to go long. Okay. Well, the market may still go long, but I almost flat guarantee you, it's almost a guarantee that it's going to do this. Past this level here, pull back, stop those people out, and then continue back up. That's how that works. So and guys, at these levels, there's thousands of contracts. okay, of cash accounts, thousands of contracts being filled. So the market makers are taking thousands of contracts at a moment. You know, it may be 10,000, 5,000, 2,000. I have no idea what the numbers are, but at major liquidity levels, those numbers are huge. And so they're going to take 3,000 brand new contracts, give them about 2 or 3 points, and then boom, pull it back. They're stopped out and they're saying, oh shit, this didn't work. It's not a breakout. And then it continues right back up. So this is why I give profit targets here. Theoretically, I could give you a profit target beyond this. I could wait for it to break. And I could wait for it to go, you know, 3, 4, 5, 10 points beyond it, and then establish that. However, I want you guys to have firm profit taking levels when I give them to you that I am sure very, very confidently going to blow through, because you know it's very, 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 very rare. It's something like this for this to happen. And it's very rare. And when you see it, you're like, I can't believe they didn't do it. They'll get up to a point. So this level's 52.63. And let's say they get up to like 52.60, and then they just tank the market. That is highly, highly rare to where they will do that without taking a liquidity level with it first. So that's why I don't set my liquidity level, or excuse me, my take profit somewhere here in the middle just because it's 15 points away. No, I set it right here because this is where liquidity is going to rest. And theoretically, I could set it above it. But you know what happens often? Sometimes at those liquidity levels, they'll tag it by a single tick. So if it's 52.63 here, they may go to literally 52.63 and a 0.25, a tick, and then drop it. I've seen it so many times. Futures are so well and accurately managed with their algos, it's incredible. SPX is not as much because you're dealing with literally the pennies, and that gets, you know, it's not as exact, but they are dealing with a lot of exactness in the futures market. This is part art, but it is a lot of science too. Was that helpful? Okay. Stop losses. Okay. One thing I like to do is move my stop losses behind 5-minute fair value gaps. This is for intraday trading. Okay. So I'm in this long trade right now. Okay. I'm not under this. You could be under this stop loss here. I'm not under this one. I'm giving this room to breathe, knowing the fact that we have volatility. If I'm already working with a 30-point stop loss, meaning it's 3 times normal, then I'm giving myself more room. Okay. So my stop loss for this specific trade, it's right here. I have a trade open right now. It's right here. So it's not the bar that creates the gap. It's the low of the previous bar. So fair value gaps are a 3-bar sequence. Okay. 1, 2, 3. Okay. That's what creates a gap. What creates the gap is the fact that the wicks of the beginning and the ending bar do not encroach upon the body of the middle bar. Okay. That's what's happening here. So when they come back down, when and if they did come back down into this, when and if, they could fill the whole thing, okay? But they'll fill it and go by $1 or $2 or whatever. I want to give them space to make that move, take that fair value gap, and continue up. So my risk management is to have it at the bottom of the wick of the candle of the beginning of the fair value gap sequence here, the 3-bar sequence. Does that make sense? If it doesn't make sense, please let me know. Awesome. Okay. You're giving the algos the opportunity to come to that gap again, but not kick your butt out of the trade. That's what's happening. Okay. You're allowing them to go fill in the liquidity void, which they may do it today, they may not. Once you get so far away from these things, we're 40 points away down here. There's a good chance, they already encroached upon into this one right here. You see this bottom one? They created the gap, and then that next one encroached into it. So it already tested inside that gap. And then it popped right back up. This gap here was never touched and was never price never re-entered here. Okay. Price re-entered here because you have this gap right here. You have this who came in just a tick and then pop right back up. You have this gap right here that has not been touched yet. Okay. Price has not returned in here, and it may or may not. I don't know. But I have mine down here. It's 25 points away from my spot price, which is giving me still room to breathe. And it's literally tucked behind what? 1, 2, 3 fair value gaps, which are 3 opportunities for price to hit and bounce. Make sense? So do you understand, Scott, what makes a fair value gap? You understand that now? So Scott, the answer to that question is yes, if it's a more, how do I say this? If it's a more, if market's in consolidation or has a narrower trading range, then yeah, I'm looking for let's say a 10-point stop loss and a 15-point profit, for example, or it may be 20-point profit. I don't know. It just depends on what the liquidity levels are. So I'll leave that. Now, because we're in a high volatility situation right now, currently for this trade that I'm in right now, I have a 30-point 30-point, which is 120 ticks, a 30-point trailing stop loss right now. So that as I go to bed, this thing can absorb a 20 to 25-point retraction. That may seem like a lot to us, but under normal circumstances, that would be like a $7 retraction because things are just amplified in the volatility. So I'm personally using for my trade tonight, but Scott, it's just because we're so volatile. Okay. Now I could use that still. If I had a $10, I could do a $10 overnight trailing stop loss. But given the fact that I'm trailing small size and the fact that I'm pretty much almost guaranteed break even here, potentially, I'm going to watch the trade a little bit for the rest of the evening. But if we get into a place, where I'm already 30 points above break even, I'll just let the trailing stop loss run. As far as I'm concerned, if they've made a retraction of 30 points on ES at some point in the middle of the night, I mean, that'll stop me out, and that sucks, but at least I'll be break even. But usually I have the liquidity levels already established. There's plenty of times where I will say it's a 10-point stop or an 8-point stop based on my fair value gaps and swing lows. Sometimes liquidity stop losses are tighter because that's where the swing low is, or that's where the fair value gap is. And it only requires a tighter stop loss. No, I sleep. Scott, I sleep, buddy. And if you go back to what I talked about at the beginning, I sleep, and sleeping is very, very important that you have a clear mind when you trade. If you're a hot mess, don't trade that day. And speaking of which, I need to go to sleep. You guys need anything? Is that it?
No, thank you, Kevin. I actually learned a lot from your fair value gap explanation.
Yeah,
That's
there's
good.
a lot out there. There really is. And you know, that whole concept was created by a guy called ICT, the Inner Circle Trader, and he has a YouTube channel, and everything is literally free. The great thing is he goes very in depth and he talks a lot. The bad thing is he goes very in depth and talks a lot. And for some people, they have a shorter attention span when the guy will make a 2 or 3 hour video on, you know, of him sitting there talking. So he's not the most concise presenter, but he is absolutely freaking brilliant. And there's also people who are brilliant too that are able to explain this in ways that are a little more concise. And there's videos online like that. So if there's a specific concept that you're not sure about, YouTube makes it, I mean, there's a wealth of information. You know what I mean? ICT, Inner Circle Trader. He's got like 1 million something followers. That's the original source. I'm never going to teach it better, but there are people out there who can probably be a little bit more concise versus the original teacher. Yeah. I don't take credit for any of the concepts of fair value gaps or liquidity levels and stuff. That's ICT stuff. Appreciate it, Joe. I appreciate it. And also, you know, I'm willing to hold on to trades longer than a lot of people are because I'll continue to watch for new gaps to create themselves. You know, there's a lot of folks that will take profit. And that's how I'm able to take today an ES trade for 110 points is because, you know, if you look at my here, I literally just rode down behind fair value gaps on the 5. Okay. I kept setting them as new ones were created. I would, you know, I'd start up here. We were down here. A new one was created. I move it down here. I just stepped it down to where even this pullback here didn't encroach on my previous stop, which was, I think, right up here at 52.93 at the time. I'm trying to recall. It's, you know, it was today. You know what? It wasn't. It was at this time, it was this gap right here. If you can see my screen, I think I had this. That's what it was. I had 52.64 or 52.65 as my stop loss. And they came right up near me. And I was like, well, we may get stopped out, guys. And it ended up coming like within $1 and then straight down. So hopefully that little bit helps y'all. Awesome. All right, guys. Well, you have a blessed evening. You all, do you have anything to add?
No, I don't have anything to add. This next week will be it's more of a Q&A session, and we'll just like talk. There's not really like a set plan.
Cool.
Maybe there will be a few things that we'll cover, but other than that, I hope everyone that joined today will be there next week.
Absolutely. Chris has a question. NWOGs. I have no idea. What is that? NWOG.
I have no idea what that is either. Can you
Chris,
explain?
can you expand on that before we go? Otherwise, I'll just assume, you know, we're just talking street slang. Oh,
On new week opening gap.
gotcha. I focus on 15 minutes. Now I will focus absolutely if we have gaps to fill, like today, they fill the gap to the upside before they move down perfectly. I mean, I trade ES. ES is 23 hours a day. SPX is not. SPX is going to have gaps everywhere, gaps up and gap down every day. Okay. ES won't. ES is going to give you a picture, the full picture of the market and its fluidity. So you can use ES and transpose those things to levels on SPX. However, I trade ES. That's what I stick with, and it's traded 23 hours a day. So that All these levels are constantly being created overnight. And the algos run 23 hours a day. So that's what I'm saying. Those algos are going to reprice not on SPX, they're going to reprice on ES and NQ as well. Yes. Scott, the answer is yes. Fair value gaps are not a futures concept. They're a concept across different asset classes. It could be Forex, it could be, stocks, it could be, whatever, futures, but it's different asset. Crypto. I mean, I'll show you right now, crypto. Bitcoin. Where I'm looking for Bitcoin to go. I talked about this on VC also. I don't know that it's going here for sure, but I do believe, these, look at these. This is just a weekly chart. So this works too. I mean, look, guys, look. Isn't it interesting? Look at if you can see my cursor here. This is a weekly. Isn't it interesting that they fill this gap exactly right here? Isn't that interesting? I mean, within probably a few dollars. I don't know what it is exactly, but yeah, fair value gaps are across all asset classes. It matters. Those gaps are huge. Indeed. Indeed. Yep. Bitcoin lower highs, lower lows on the weekly chart. Not looking good for Bitcoin unless you're shorting it. So anyway, guys, have a great evening. I believe this concludes everything. Thank you guys so much.
All right, have a good night, guys.